Stop. Take your hand off the mouse and do not hit that sell button. If you are looking at your screen right now, watching the price of silver drop, and you feel that knot twisting in your stomach, you need to listen to every single word I'm about to say. You are being tested. Right now, at this very moment, we are witnessing one of the most aggressive, calculated, and deceptive financial maneuvers in history. They want you to panic. They want you to think silver is going to zero. They want you to believe that the precious metals market is dead so that you throw your hands up in defeat and hand over your wealth for pennies on the dollar. But what if I told you that this crash, this drive down to $15, isn't the end? What if I told you this is the signal you have been waiting for? Welcome back. If you have been following the charts lately, you know exactly why we need to talk. The volatility is off the charts. The fear index is climbing, and the mainstream media is starting to whisper that the silver bull run is over before it even began. But I want to ask you a serious question. Do you really think the biggest banks in the world, the ones who have been accumulating physical metal quietly for years, are selling right now? Or do you think they are shaking the tree to see who falls out? You see, the market is an emotional machine. It is designed to transfer money from the impatient to the patient. And right now, we are in the middle of what insiders call the Final Shakeout. To understand why silver is heading towards $15 before it likely explodes to triple digits, we have to look at the psychology of the market makers. These are the institutional giants, the whales, the people who move the market with the click of a button. They know something about human nature that is very simple. They know that most people buy when they feel safe, when the price is going up, and when everyone else is talking about how great an investment is. That is called FOMO, or fear of missing out. But the smart money? The smart money does the exact opposite. They buy when there is blood in the streets. They buy when you're scared. And to buy low, they need the price to be low. But how do you get the price of an asset as valuable as silver down when inflation is rampant and the world is in chaos? You manipulate the emotions of the retail investor. You crash it. Think about the last few times silver took a massive dive. Think back to March of 2020. Do you remember that? The world was locking down, fear was everywhere, and silver absolutely plummeted. It crashed down below $12. Everyone said it was over. Everyone said cash is king. But what happened next? Within months, silver more than doubled. It shot up to nearly $30. Now ask yourself, who bought all that silver at $12? Was it the average guy on the street who was worried about his job? No. It was the institutional whales who triggered the sell-off in the first place. They shook the weak hands out of the market, scooped up the physical metal at bargain basement prices, and then rode the wave up. And right now, they are setting up the exact same play, but on a much, much larger scale. I want you to visualize a slingshot. To get a slingshot to fire a rock hundreds of yards, you have to pull it back. You have to create tension. The further back you pull it, the more violent the release is going to be. But that pulling back process, it feels like a decline. It feels like a retreat. If you are the rock in the slingshot, it feels like you're moving in the wrong direction. That is exactly where we are with silver. They are pulling the price back, creating massive tension between the paper price on the stock market and the physical reality of supply and demand. They are pulling it back to $15, not because that is what silver is worth, but because that is how much tension they need to launch this thing to $50, $75, or even $100. But why $15? Why is that the magic number? It is psychological warfare. $15 breaks the spirit. It is a level that makes recent investors feel foolish. It is a price point designed to trigger stop-loss orders on trading computers all over the world. When those automatic sell orders hit, it creates a cascade, a waterfall of selling that drives the price down even further without the banks having to do anything. They just tap the domino, and the retail investors knock the rest of them down. It is a brilliant, ruthless strategy. And if you're not aware of it, you are the victim. But if you see it for what it is, you are the predator. Let's talk about the narrative they are feeding you. Have you noticed the news headlines lately? They are talking about interest rates staying higher for longer. They are talking about a strong dollar. They are telling you that precious metals don't pay dividends, so why hold them? They are flooding the zone with negativity. This is not an accident. This is a coordinated effort to manufacture consent for a lower price. They need you to agree that silver is worth less so that you are willing to sell it to them. It is a confidence game, and the moment you lose confidence in your position, they win. I want you to think about your own portfolio for a second. Why did you buy silver in the first place? Did you buy it to get rich quick in a week? Or did you buy it as insurance? Did you buy it because you know that fiat currency, the paper dollars in your wallet, is losing value every single year? The fundamentals that made you buy silver haven't changed. In fact, they have gotten stronger. The debt clock is spinning faster than ever. Geopolitical tension is rising. The only thing that has changed is the price on the screen. And if the fundamentals are better, but the price is lower, that is not a crisis. That is a sale. That is an opportunity. However, holding on is the hardest thing to do in investing. It is easy to buy, it is easy to sell. But doing nothing? Just sitting on your hands while the screen flashes red? That takes guts. That takes a level of conviction that most people simply do not have. That is why the wealth gap exists. The wealthy have the patience to sit through the storm while the average person jumps overboard the moment the waves get a little rough. The drop to $15 is the storm. It is the hurricane designed to wash away the tourists, the people who are just here for a quick buck. If you are watching this video, I know you are not a tourist. You are here because you sense that something isn't right. You sense that the game is rigged. Let's go a little deeper into this rigged concept. You have probably heard of the term paper silver. This is crucial. For every ounce of real physical silver that exists in a vault somewhere, there are hundreds of paper contracts traded on the COMEX. These are essentially bets on the price of silver, not the silver itself. The banks can print these paper contracts out of thin air. If they want to drive the price down, they just dump millions of ounces worth of paper silver onto the market. It costs them almost nothing to do this. It creates a panic, the price drops, and then they quietly buy the real physical metal at the lower price. It is the ultimate sleight of hand. They are selling you a phantom to steal your reality. So, as we stare down the barrel of a $15 price tag, you have to decide which game you're playing. Are you playing the paper game, where the bankers make the rules? Or are you playing the physical game, where the laws of physics and economics eventually take over? Because eventually, the paper game breaks. Eventually, someone asks for delivery of the metal, and when the vaults are empty, it doesn't matter how many paper contracts say silver is $15. The price will go to whatever the market demands for the real thing. And that is where the explosion happens. That is the moment we are waiting for. Now, I know what some of you are thinking. You might be sitting there saying, okay, I get the manipulation part, but what if silver really is just losing value? What if nobody wants it anymore? That is a fair question. To answer it, we have to ignore the guys in suits on Wall Street and look at the real world. We need to look at industry. We need to look at technology. Because when you strip away the financial games, silver is arguably the most critical strategic metal on the planet right now, and the supply crunch that is coming is going to make this $15 price target look absolutely insane in hindsight. Let's start with the green energy revolution. You can't drive 5 miles these days without seeing a solar panel or an electric vehicle. Governments around the world are mandating a shift to renewable energy. They are pouring trillions of dollars into this infrastructure. And do you know what the single most important component for conducting electricity in a solar panel is? It is silver. There is no substitute that works as well. Silver is the most conductive metal on Earth. To build the solar farms that the world governments are planning, we need hundreds of millions of ounces of silver every single year. Think about that for a second. The demand for solar alone is consuming a massive chunk of the yearly global mining supply. And that demand isn't shrinking. It is growing exponentially. Every year, solar panels get more efficient, and while they try to use less silver per panel, the sheer volume of panels being manufactured is skyrocketing. We are talking about gigawatts of power, and then you add in electric vehicles. An EV uses significantly more silver than a gas-powered car. It's in the battery management systems, the contacts, the electronics. As the world shifts from gas to electric, the demand for silver in the automotive sector is going vertical. So here is the disconnect. You have demand hitting all-time highs. You have a world that is becoming more electrified, more digital, and more high-tech. All of that requires silver. From the 5G towers going up in your neighborhood, to the smartphone in your pocket, to the advanced missiles and satellites used by the military, silver is inside all of it. It is the lifeblood of modern technology. Yet the price is crashing. Does that make any sense to you? In a free market, when demand goes up and supply stays flat, prices rise. If prices are falling, it means the market is broken, or more accurately, it is being suppressed. Let's look at the supply side. This is where it gets really scary for the people betting against silver. You can't just print more silver like you can print dollars. You have to find it, dig it out of the ground, refine it, and ship it. And right now, mining supply is stagnant. In fact, it's dropping in many major producing countries. The easy silver has already been found. Miners are having to dig deeper, process lower grade ore, and deal with stricter environmental regulations that make it harder and more expensive to open new mines. It takes 10 years to bring a new mine online. So even if the price shot up to $50 tomorrow, we wouldn't see new supply hitting the market for a decade. We are entering a period of structural deficit. This means the world is consuming more silver than we are digging out of the ground. When you have a structural deficit, you have to drain the above-ground stockpiles. And that is exactly what has been happening. The vaults in London and New York are bleeding silver. The inventories are dropping. We are running on fumes. So when the manipulators crash the price to $15, they are doing something incredibly risky. They are discouraging miners from producing. At $15 an ounce, many mines are not profitable. They will shut down. They will stop digging. This restricts supply even further. It is like compressing a spring. By forcing the price down, they are guaranteeing a massive supply shock in the future. They are creating the perfect storm for a super spike in price. This is why I call it the final shakeout. They are trying to shake you out because they know there isn't enough silver to go around. If everyone holds on to their physical silver, the banks are in trouble. They need your silver. They need you to panic sell so they can cover their short positions and refill their vaults before the industrial panic sets in. Because when Apple and Samsung and Tesla realize they can't get enough silver to build their products, they aren't going to care about the paper price on the COMEX. They're going to pay whatever it takes to get the physical metal. That is when the decoupling happens. That is when the paper price becomes irrelevant and the real price takes over. I want you to imagine a scenario. Imagine it is a year from now. The price of silver was crashed to $15, stayed there for a few weeks, scared everyone out, and then the news breaks. A major tech company announces a shortage. Then a major mint announces they are out of coins. Suddenly, you can't buy silver for $15 anywhere. The spot price says $15, but the premiums are $20. You're paying $35 or $40 just to get an ounce in your hand. And then the spot price chases the physical price. It jumps $5 in a day, then 10, then we are back at 30, then 50. And the people who sold at 15, they are left holding worthless paper currency while the train leaves the station. This has happened before. Look at the palladium market a few years ago. It was quiet, ignored, and then suddenly the auto industry realized there was a shortage. The price went parabolic. It didn't double. It went up 5, 6 times. Silver is a much smaller market than people realize. It doesn't take much money to move it. If just a tiny fraction of the money currently invested in the stock market or crypto moved into silver, the price would double overnight. The market is so tight that any significant increase in buying pressure will blow the lid off. And the lower they push the price now, the more explosive that buying pressure will be when the trend reverses. We also have to talk about the geopolitical angle. Look at the BRICS nations: Brazil, Russia, India, China, South Africa, and the new members. They are actively accumulating gold and silver. They are moving away from the US dollar. They know that in a world of sanctions and currency wars, physical assets are the only true safe haven. China is the biggest producer of silver, but they are also the biggest consumer. They used to export silver. Now they are importing it. They are keeping every ounce they mine and buying more from the rest of the world. Why? Because they know where the price is going. They are using this low price to drain the West of its real wealth. While Western investors are panic selling paper contracts, the East is backing up the truck and loading up on physical bars. So when you see that red chart, when you see $15 flashing on the screen, do not see it as a loss of value. See it as a subsidy. The manipulators are subsidizing your purchase. They are keeping the price artificially low so you can accumulate more. If you went to the grocery store and steak was on sale for 90% off, would you panic and run away? Or would you fill your freezer? Silver at $15 is the sale of a lifetime. It is a gift. But it is a gift wrapped in fear. You have to unwrap the fear to get to the opportunity. The mechanics of this crash are designed to test your conviction. They use algorithms that read market sentiment. When you click on a bearish article, when you search, "Should I sell silver?" the algorithms know. They feed on that fear. They push the price to the exact point of maximum pain. This is calculated. It is mathematical. But the one thing the algorithms cannot calculate is the resolve of a stubborn, informed investor who understands the fundamentals. They can't shake you out if you refuse to let go. We are heading into the final stretch here, and this is the most important part. We have talked about the manipulation, and we have talked about the undeniable industrial demand. Now, we need to talk about you. We need to talk about your future and the massive wealth transfer that is right on our doorstep. You see, history is filled with moments where wealth changes hands. Usually, it moves from the many to the few. But every once in a while, the few get too greedy, they overplay their hand, and the people who were paying attention, the people who stood their ground, end up holding the keys to the kingdom. This crash to $15, this is the line in the sand. This is where the transfer happens. If you sell now, you are transferring your wealth to them. If you buy, or even if you just hold, you are positioning yourself to be on the receiving end of the greatest repricing of assets we have ever seen. Because when the dam breaks, it is not going to be a slow trickle. It is going to be a flood. We are looking at a potential currency crisis in the next few years. The dollar is being debased at a record rate. When faith in the currency cracks, people rush to hard assets. And silver has historically been the people's money. Gold is for kings, but silver is for the people. When the public wakes up to inflation, they can't afford gold. They buy silver. Imagine millions of people trying to buy a market that is already in a deficit. Imagine the crowd trying to squeeze through a tiny door. The price has nowhere to go but up. And I don't mean a 10% gain, I mean life-changing gains. We're talking about silver returning to its all-time high of $50 and then smashing through it to reach its inflation-adjusted value, which some experts calculate to be over $150 an ounce. Think about the leverage there. If you buy at 15 or 20 and it goes to 100, you have multiplied your wealth 5 times over. Where else can you get that kind of return with an asset that has zero counterparty risk? This is why you cannot sell. Selling now is financial suicide. It is giving away your lottery ticket right before the numbers are drawn. The final shakeout is designed to be the most painful part of the cycle. It is always darkest before the dawn. They want you to feel hopeless. They want you to look at your stack of silver and feel disgust. Why? Because if you hate it, you will sell it. You have to flip that switch in your brain. You have to look at that stack and see freedom. You have to see it as your shield against the chaos that is coming. I want to leave you with a strategy. How do you survive the crash to $15 without losing your mind? First, stop watching the daily chart. Seriously, turn it off. Unless you are a day trader, the minute-by-minute price action is just noise. It is designed to stress you out. Check the price once a month. Second, understand your timeline. If you don't need the money next week, why do you care what the price is next week? You're holding for the long haul. You're holding for the revaluation. Third, if you have cash on the sidelines, get ready. If they really do push it to $15, that is your signal to back up the truck. That is your signal to dollar cost average and lower your basis. Do not let them scare you out of your position. Be the strong hand. Be the investor who looks the bank in the eye and says, I'm not selling. Because when the dust settles and the paper market implodes, the only thing that will matter is how many ounces you have in your possession. Not how many dollars they said it was worth on a random Tuesday in October, but how much real wealth you actually hold. I want to hear from you guys on this. This is a community, and we need to support each other when the fear gets high. Go down to the comment section right now and tell me, what is your line in the sand price? If it hits $15, are you buying more or are you folding? And be honest, I also want to know, do you think this is pure manipulation, or do you think the economy is actually crashing? Let's get a discussion going down there. I read every single comment. And listen, if you know someone, a friend, a family member, a coworker, who holds silver and is freaking out right now, do them a favor. Share this video with them, send it to them right now. You might just save them from making the biggest financial mistake of their lives. We are in this together. The bulls are going to win this war, but we have to survive this final battle. Stay strong, keep stacking, do not let them take your wealth. The shakeout is here, but the breakout is coming. Thanks for watching, and I will see you in the next one.